Hi everybody, Alex Employer here from Expert Forex, and in today's video we're going to be looking at a solution that can solve the danger of using set files. Now this is only the main solution. There are others, but if you follow this particular solution you will eliminate most probably 90% of the potentially very dangerous set files. Now in a previous video I said using set files is very dangerous, and I showed you how just a week's difference can blow your account or turn your account into a 500% gain by just starting at a slightly different time. So we're going to look at those examples that I used in that video, and we're going to look at how we can make those settings safer. So the first step would be just simply lowering the lot sizing that is used, and then looking at a particular EA. We're going to be looking at the hedged EA, then looking at the settings that relate to the lot sizing, because if you lower the lot sizing you have to adjust the settings that relate to that particular lot sizing. But the whole objective of this is to lower risk. Okay, so now we're back at the same test we did in the previous video. If you haven't watched the previous video, please go and watch it first before watching this particular video. But here we have the euro being traded by the hedge EA from the first of this year to the current date, and we're trading it on a 15-minute time frame, and we're using a spread of 1, and here are the results that have been generated. $54,000 in 7.5 months. Fantastic return, but it is risky. So we say, all right, why is it risky? Because we're using 10,000 and the drawdown was 17,000. A very big drawdown, really big drawdown. So we want to say, okay, we want to reduce that drawdown. So let's reduce the drawdown. See if we can reduce this drawdown to a more manageable level. But remember, by reducing the drawdown, we're also going to reduce the profitability. But we're going to give it a go, and let's see how we go. So the first thing that I'm going to do, and as I've mentioned previously, is we're going to look at lowering the lot sizing. So I'm going to just do exactly that. I'm going to settings, and I'm going to expert Forex properties, and there are the actual settings that have come through, 2, 6, and so on. So what we need to do is we need to find the lot sizing, and there is the lot sizing setting for this particular EA, and it's 0.6. So just to make it easy, I'm going to reduce the lot sizing to 1/10. So in other words, instead of trading 0.6, I'm going to trade 0.06. So it's going to reduce income by 90%. It's going to reduce it to 10% of the previous income. So that's more or less what we're expecting. Now the next trick is to find settings that are affected by this initial lot size adjustment that we've made. And I'm just going to go through. Multiplier is not affected. That we're not even using. Initial take profit is based on pips. So because it's based on pips, I don't have to worry about adjusting it. It still needs this. And the initial take profit is 30. So I'm going to just leave the initial take for it's a hidden profit. I'm going to leave that at 30, and we just go down. There's nothing else affected. The hedge lot multiplier. Now that is another lot sizing setting. That is 1.6, and we don't really need to adjust that because that setting will be based on the initial lot size setting, so we don't need to worry about that. But here's one that is, because this is in dollars, and remember we've now reduced the lot sizing by 90%, so we need to reduce this by 90% too. So what I'm going to do, instead of 120, I'm just going to put 12 in there, and let's have a look. That's about all that we have to do. And so we've only really made one adjustment, maybe two, and then then everything is fine. So let's go and see what happens to the results based on those changes. And I'm just going to start it again. Same time period, exactly. All that's happened is I've reduced the lot sizing to 10% of the previous levels. And it's running away, and let's wait to see the final result. Let's have a look at the graph in the meantime. There's the graph going away. Boom, boom, boom. Up it goes. Up nicely. And let's see where this all finishes. Big drawdown over there. Very big drawdown. Up it goes. Meets the equity line again. And away it goes. Now that's quite a big drawdown considering that we've reduced lot sizing. But let's have a look at what the final result is. It's now up to 550 open trades. Still a bit of time to go. And there we are. It stopped there. And let's have a look at the report. Okay, so now the report says, okay, now we've only made $5,000 and our maximum drawdown is $3,500. And remember, these are not optimized or suggested settings. They are just illustrative settings. I would personally like to see this drawdown even lower than that, but this shows you how you can reduce risk. So the risk on this particular trading has been reduced by 90%. And that's as simple as it gets. Simply reduce the lot sizing. So let's have a look. So the absolute is only $1,000. That one's, and the returns are still very acceptable. 50% return in 7.5 weeks is still very acceptable. But now our risk is highly reduced, highly reduced. All right, so let's go back to the previous exercise that we did in the previous video. So now we say we experienced, when we started on Christmas Day, we experienced a margin call. So let's have a look if that happens again. So we go start, and it's trading away. And let's have a look at the graph. All right, so it started with quite a big drawdown there, right in the beginning, but then steadied down quite nicely. And then when the green line comes up and meets the blue line, it means that the drawdown has been neutralized and there's very little drawdown. You can see it's traded for a very long period with virtually no drawdown. So let's have a look at the final result of this one. And I think you're starting to get the idea here. When you get a set file, simply reduce it to reduce the lot sizing to 10% of what is shown on the set file. And if you can't do that, reduce it as much as you can to the minimum lot size that your broker will allow you to use. Okay, it's still trading away. Should stop any minute now. And let's see what happens. Okay, there it stopped. And we go to the report. And we see, from a margin call in the previous video, we have now produced $5,400 with the same kind of drawdown as the previous run and the same kind of drawdown there. So as you can see, we have turned these settings around to be 50% return. That is a 50% return on your money by simply being more conservative. So let's have a look at the settings and we'll see 0.06 has produced 50% return. Now 50% return is a fantastic return in 7.5 months. So you can even reduce this more. You can make this 0.04, or you can even make it 0.03. 25% is still a fantastic return after 7.5 months. So you can reduce your risk considerably by just taking that lot sizing setting and reducing it tremendously. I hope this is a major lesson that you've learned. So whenever you get a set file, the first step you do, you reduce the lot sizing to the bare minimum, or to at least 10% of what you received. That is a safe setting. Now, I hope you've enjoyed this video, and I really hope that you've learned something from this video. It is such a fundamental thing that I've just taught you, and the biggest problem here is greed. People don't want to use low lot sizing because they're greedy. They say, why should I make 50% return when I can make 500% return? And therefore they increase their risk by 1,000%. That's a huge increase in risk. So rather reduce your lot sizing, get a fantastic return at a low drawdown. Now, any links about items mentioned in this video will be in the description of the video, as well as in the first commentary of the video. So from me, Alex Deploy, cheerio.